Welcome back to another stock market open live stream. Today we are kind of starting out in a similar way that we started out yesterday, and we've got unemployment claims coming out in about 30 seconds. What I'm looking at is I'm looking at that same sort of 57.5 level there on BTC. If I zoom out to the 5-min, I get the same sort of rejection yesterday morning as I'm seeing right now. So we'll take a look at this. It could be possible that we'll get some entertainment out of unemployment claims, expected to be at 240,000. Let's go. Here we go. And the unemployment claims are coming. 233, a tiny little lower than expected, and the continuing claims are exactly as expected from the prior. This is, people like looking at these. These are usually useful numbers, although usually when unemployment claims spike, you're already in a recession, and it just makes things worse. So you are getting some excitement here, though, on the Qs on those unemployment claims, not coming in horribly yet. Which to be totally expected. But look at that. You had a candle spike from 435 to the 438 line on the Qs. So some excitement here. And you're going back for a retest on BTC. Let's see. Yep, there we go. Going right back to retest that line. On revisions, we had about 1,000 more claims on the last initial set, and about 8,000 fewer continuing claims. So overall, relatively benign, weekly payroll or weekly job claims here. I'm actually surprised the market is moving so much off of the weeklies. So it really actually goes to evidence how important jobs have become to this economy. Usually, these unemployment claims do not create any form of a candle. It's usually like a jobs report or an inflation report, but not a weekly claims number. So to see the NASDAQ move somewhere, around 75 basis points, maybe 0.5%, because it was slightly green, in the unemployment claims read is a little surprising. And again, it really just goes to evidence that this market is heavily concerned about jobs. We did just see the 10-year Treasury go from about -4 basis points to flat. So a little bit of a recovery there, and on yields, that is. And then the 2-year is up 2.7 basis points. So looks like we might be getting a bit more inverted. Let me see here. If I look at the 2-year, I'm at 4.028, so almost 4.3. And then the 10-year in the U.S., okay, let me do the math here. 4.028 minus, it keeps bouncing around, that's why. Okay, well, we're about 4.8 basis points inverted right now. It's pretty close to uninversion. And yeah, 4.8 inverted. Wild. Okay, well, we'll see where that goes. Oh, look at that. BTC just broke the 57.580 line. That's pretty good, mostly because that was a rejection point yesterday. Really looks like we waited for those unemployment claims today to get some enthusiasm, and that seems to be working right now. Let me go to the unaveraged here. Testing perfectly, running up to that line over the last 3 minutes here, and really testing the 438.90 line. Kind of remarkable. I mean, it's line to line is what we just saw here. And I mean, you saw it. I didn't draw the lines. Robinhood, look at that. Line to line, 1767 to 1794. You had Disney down about 88 bips, Meta 73 up in the pre-market here. You've got AMD's up 188. Palantir going for a 3% move out. Nice. Let's see here. Yeah, if you go let's do, one of my favorite things to do is I like looking at unemployment claims over history, because people think this is a recession indicator or not. And I think it's a little entertaining when people say that, because take a look at this. Unemployment claims don't usually spike until closer to the end of the recession. So look at this. You could have been literally where Lehman Brothers collapsed was, where were we? Lehman Brothers collapsed right here, right around these dates here. So September 6th and 20th, somewhere around this 400 mid 400,000 in claims, which was actually still in line with the roughly that mid 400s claim in '05. But you didn't actually peak out until basically Fed capitulation in the bottom of the market, which was, February, March of 2009. So this idea that claims are some form of a leading recession indicator is ridiculous. You could see that in 2008. You could see it in 2000. You had a little bit of a move up here, but you really didn't peak out until later in 2001. In the 90 recession, you didn't peak out until 91. Over here in 82, you didn't peak out until the recession was over. Didn't peak out until the recession was close to over in 80. Didn't peak out until the recession was close to over in 75. The only time you actually peaked out earlier was about 1970 on those unemployment claims figures. So it's really interesting. But anyway, it does go to show you how important right now unemployment is to the market. So let's see what we got here. Cameron Vaughn says, let's go Ripple. That's awesome. Kind of crazy the amount of euphoria still. This market wants to run. It's being dragged down, kicking and screaming. Yeah. Somebody says, sell the rip. Yeah, well, that's what has been happening. I don't know if that'll happen today, but that is exactly what has been happening is people have just sort of, as soon as stocks have gone green, they started selling the rip.
Sell the rip.
So, but anyway, you can clearly see this 438 line is a big one here for the Qs. The other thing is we really have a lack of catalysts right now. I mean, outside of a few earnings, it's really been a dry week. So next week we'll get PPI, CPI, which I'm not convinced will be very as useful as like a new unemployment report, but we won't get one of those until September, so it'll be a while. All right, let's take a look at the dog. So Datadog comes in with a teeny bit weaker forecast than expected, not by much, couple $1 million, and adjusted EPS better than expected, as well as Q2 revenue better than expected. So basically a slight beat over here at Datadog. And I think Apps, Digital Turbine, I think they're like memeing up right now. Let me see here. Only 20%. They were up a little higher last night. Okay, then you've got, let me see here, Plug. Oh no. What happened to Plug? Let's see here. Plug Power. Down 8%. Ouch. Alright, so Plug Power. Oh, it comes in at the upper end of fiscal year. No, sorry, fiscal year guide comes in low. I read that wrong. Q2 misses. Loss per share misses. Everything's worse at Plug. I remember I did a video on this company at $70. And I'm like, this is a bad company. Don't invest in this. The video is still up. You can probably just type into YouTube, Meet Kevin, Plug Power. I'm like, high risk here. Anyway, now it's $1.90. That's crazy. All right, what about Lily? Let's see. Eli Lilly soars 10% after boosting revenue. Q2. Let's see here. Zepbound. I don't know what Zepbound is, but a lot more revenue than expected. Zepbound. What is that? Zepbound. Zepbound. It is... Oh, it's a weight loss drug. Oh, yeah. Okay, yeah. People taking Zepbound 15 mg lost up to 48 pounds. About 21% weight loss. Wow. Okay. Then and then still the Monjaro Monjero, whatever. $3 billion of revenue versus the 2.73 expected. Wow, these weight loss drugs are just crazy. Wow, wow, wow. Lilly. LLY. Let's see here. So, yeah, wow, 13% on Eli Lilly. Oh, you actually did have a recent correction. Nice little pop-up off of this. Very nice. Look at that. Eli Lilly. Very cool. So, good for them. Okie dokie. Then, what else? Talked about Hood. And they're actually bouncing right now in the pre-market a lot. Because they were only up about 2% after earnings. But look at that. Those job numbers came out. It just set off the buying. It's mind-blowing to me because unemployment claims numbers are so lagging. But the market generally, doesn't care. They're just looking for any catalyst. And it's like, oh, better than expected. Okay, all in. Let's see here. All right, let's see what we got over here.
Normalization. So things have normalized. You strip out the nonsense around owner's equivalent rent and the lag nature of the actual rents, and inflation is basically back to target. And the unemployment rate is actually higher now than it was before COVID, when the funds rate was 1.75. So he uttered the word normalization. The only thing that's not normalized is the Fed funds rate. And so what's normalized? Well, according to their own estimates, the neutral rate, the equilibrium rate, the rate that we should have in a balanced economy, which he said we're in, is 2.75. And every Taylor rule estimate shows that today the funds rate maximum should be 4%. We're still 5.25, 5.5. So they are ridiculously behind the curve. No matter what's happening with the equity market, and it wasn't about data that caused the markets to start thinking they're going to go intermeeting. It was, are we going to continue to get 1,000-point down days in the Dow? That was just all about the stock market. But they are ridiculously behind the curve, irrespective of what the capital markets are doing. So he basically said things are normalized, and we do not have a funds rate that is consistent with a normalized economy. So they have a long road to hoe.
David Rosenberg of Rosenberg Research. David, great to catch up, sir, to get your thoughts on this economy and where David thinks the Fed needs to be. You mentioned capital markets. We'll talk about capital markets. Equity futures right now on the S&P 500 near session highs, up by 0.8%. Check out this move on a Russell, the small caps, up by 1.6%. If you're just joining us, we were basically unchanged on the S&P 500 as of about 12 minutes ago, before we got this economic data. Jobless claims delivered the right kind of downside surprise. 233 against an estimate of 240. It's not a big swing, and yet here we are seeing this massive move in the equity market and bonds as well, Danny. Yields are up by 6 basis points across the front end of the curve, the 2-year back through 4%.
The thing that I'm really struck by is that this is a market trading this as if it was non-farm payrolls, like as if it was a North Star type of report, and this it is not. Not even just that. Not even that just historically this is a noisy print, but this one specifically is a really noisy print because of things like weather, because of the things of seasonality. We've put so much importance on this report, and that's why you got the market reaction you did.
Matt Diesel with us around a table of Merrill and Bank of America Private Bank. Matt, to Danny's point, we've both been talking about it.
Roman, it was a joke, man. You're good, dude. Oh, that's funny. Well, hey, congrats anyway, but thank you. I appreciate it. That's funny. Yeah, Gabriel Green, did you watch? You guys got people are like, oh, Kevin, did you talk about Taylor Swift? Did you watch my video last night? I talked about it. It's in there. Main channel. It was only a 20-minute video with 10 minutes on 2x. You get caught up. Anyway, so all right. Well, let's see how this holds. If you want to see green today, you really got to hold 57,580 over the next 45 minutes. And for the Qs, you got to hold the 438 here. But I think that that reporter there was right on. She's like, wow, the market's treating this like it's non-farm payrolls. Honestly, I think people have no idea what the difference is between the non-farm payrolls report and unemployment claims. Kind of crazy. Yeah. So I think I also think that chart is just very interesting with how lagging initial claims are. But let's listen to what CN Sizzle has, and let's see if they have any yapping to do about this. Here we go.
Right, well, which is important.
Roger, real quick, we talked to Wes Moore yesterday, the governor from Maryland. For the governor of Maryland, and he was saying, and we were talking about the regulatory sort of universe when it comes to antitrust and the like. You're in the banking business. That part matters to you, and I think there's a whole view that this administration may have put a chill, if you will, on particular kinds of deal-making, antitrust and the like. Others say, you know what, it was, this kind of approach was in order. It hadn't been. We haven't approached this in a long time this way around competition. We should be. He seemed to suggest that he thought that Harris actually might shift on some of those issues. What do you think?
Well, first, I think that the antitrust regime under President Biden has been too extreme. Maybe we did need a correction because there were certain things that were allowed to go forth in earlier years, the Trump years, which I might not have favored from a competition policy point of view. Whether whether President Harris, if she achieves that, makes a change, Andrew, I don't know. Honestly, it wouldn't surprise me because there's so much controversy over Jonathan Kanter and Lena Khan, but I wouldn't expect that change right out of the gate. And I'm not sure whether it would be made or it wouldn't. If I were, one of the high-profile, for example, Silicon Valley types who are clamoring publicly for Lena Khan's head, honestly, I wouldn't do that. I wouldn't do that because it fires up the progressives. You then have a tug of war between the progressives and those who want a change, and it's not constructive. So I don't know if there'll be a change in that regard. It wouldn't surprise me, but I don't really know that.
Okay, Roger, telling me they're playing music, telling me we got to go. But good to have you on. We'll see you coming up. Joe Lonsdale, the venture capitalist, on this week's tech sector volatility and on gauging the level of support for former President Trump in Silicon Valley. Squawk Box will be right back.
Tony, it's gone.
All right. So, all right, let's see here. So, okay. Yeah, I think one of the things to consider as well is when we talk about unemployment claims like this, I think people know, I should say, I think institutions know that this is an extremely lagging indicator. And really, you're probably looking at institutions that might use this again as an opportunity to, as we like to say, sell the rip. Who knows? We'll see. This is it's going to be really interesting. Right now, you've got the Qs going back to test 438.9, and BTC hasn't gotten back down there yet, but that's a nice test there on the Qs. So it'll be interesting to see if this report sets up the sort of, because it's a nonsense report, but if it sets up sort of the trading tempo for the day. Do people still have selling or unwinding to do, de-risking to do or not? But otherwise, I mean, the problem too is we just don't have caddies. I had a few earnings this week, but none of them were really extremely meaningful. Write your calendar, or mark on your calendar if you don't mind, August 13th, and you're getting PPI data that day. So PPI is, no, I don't think these are fib lines on the Qs. Let me see. No, I don't think so. I think these were just trading lines that I found. But anyway, PPI on the Qs. PPI on the Qs. PPI comes out August 13th, expecting 0.2 across the board. CPI comes out the next day, expecting 0.2, 0.2, Year-over-year 2.9. Year-over-year core 3.2. Both of those a decline of 0.1% from the last. Then we get retail sales the next day, along with unemployment claims again, and import and export prices. So next week we actually get catalysts. This report today is not a catalyst, and so I think trading off of it is not going to last. But that's okay. I mean, whatever. So I don't have any trades expiring this week. It doesn't matter to me. So let's see here. Trade desk is down at 85-ish. Take a look at some of these. Oh, Monster fell 6%. Oh, they just had earnings, huh? Oh, we were guessing in the course member live stream last week. We're like, I don't know, kind of think they're going to miss. Mostly because of the Celsius report. It was a disaster. Yep, Q2 EPS misses. Lower growth rates in Q2. 41 cents versus 45 expected. Net sales missed. Gross margin actually beat. Well, that'll come down as they lower prices. OPEX came in a little low, which is good. Net sales slide outside of the U.S. All right. Interesting. Wow. I think this is Embraer. I don't know if that's news or what, but Embraer pre-market. Some securities trade so thinly in the pre-market. The moves are insane. Oh, they did come out with earnings. Adjusted EBITDA 190 versus 132. That's pretty good. And let's see here. Executive segment continues to show solid demand. Wow, that's impressive. Company had another solid quarter. Focus continues to be in financial efficiencies. Continues to deal with supply chain constraints. Yeah, aerospace has dealt with these constraints for a very long time. And all right, very good. Coinbase up about 3%, sitting at 185 right now. You've got ASML is up a couple. Ubiquity in that mid 160s range. Microsoft almost up 1%. Google up 128. CrowdStrike, wow, CrowdStrike really struggling to get out of that 430 range there, huh? Celsius, wow, once again down after hold on, this is yeah, we reviewed their earnings, but oh, they're moving down again off monster earnings. That's it. Enphase not really moving today. Redfin up about 3% after being down 9%. Oh, Tesla goes green pre-market. Look at that. Also off the unemployment claims. Goes right up to my 195 level. You know, yesterday I mentioned if we break 197, we're going to 195. And it's literally what happened. And that's where we sit right now. You can see these little blue lines or purple lines that I have. Sort of little trading lines. And then you've got Palantir's up 3, Affirm's up 2, AMD's up 2. Hood's really holding on to the gains. And BTC kind of slowly bleeding a bit here. Oh, good. Look at that. On the that's again a nice little bounce off of that 438.9. So, okay. Let's see what else is news. So we did Embraer. We looked at claims. Let's see here. Eli Lilly, that was crazy. Okay. This was interesting. I saw Amazon's $4 billion investment into AI firm Anthropic faces UK merger investigation. I didn't know that an investment is considered a merger, but okay. Phase 1 investigation into Anthropic to assess whether the deal has resulted in a relevant merger situation that may harm competition in the UK. Partnership. UK has 40 days to decide whether it'll harm competition. Crazy. I did not know a partnership and investment could all of a sudden be called a merger. Mind-blowing. All right. So, what is this? Oh, yeah, today's 8/8. Happy Robotaxi Day. Oh, wait. In fact, there's an article on this. This was supposed to be the day that Tesla would show off some of its robo-taxis, but it's been postponed. Delay was a letdown. Let's see here. We'll talk a little bit about FSD. Blah, 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 blah. Tesla warns customers that FSD is intended for use by fully attentive drivers who keep their hands on their wheels. Blah, blah, blah. Okay, this is all boring. I don't think there's any news in here. Little fraud allows you to be distracted too much. Okay, yeah. I just want to complain about Tesla. Lame. All right. Let's see the Suits reaction to jobs. Okay. Downside surprise, nominal downside surprise, but okay. Downside surprise and jobless claims should help calm recession fears. It's not an indicator. How do they not even know this? But the trending claims suggest we could still expect the Fed to begin cutting rates in September and continue in each meeting afterwards. Well, yeah. There's also been a lot about the seasonality of claims, but that's a red herring because the seasonal adjustment factors for 24 are largely in line with those of 23. Almost 100,000 claims more now than a year ago, but again, still nominal. Claims repeat pattern. Equity futures love it. Hit and miss pattern. Slightly below consensus. Okay. What else? Something Japanese stocks on sale. You know, I think the Nikkei ended up going negative yesterday. Nikkei 225. It did. See, this has been a little bit of a leading indicator for me. I traded off this yesterday because they shaved off a good like 1.5% yesterday from their high. And today they actually went positive, you know, in their trading hours by a good chunk. Can't really get the measure here, but they were up maybe 60 or 70 basis points at one point. I think right after lunch they were up 60, 70 basis points. And then you actually drop into the negative here, and you're at about 74 basis points negative on the Japanese index here. Although JP Morgan says about 75% of the carry trade's now covered, so people are optimistic about that. Okie dokie, what else? Let's see here. Hood's holding on to its gains for now. Ooh, Amazon's even up. Come on, Palantir. 29. That's where you need to go. 29. 29. Alright. We'll see how robust these pre-market moves are when the market actually opens. Unfortunately, I don't think unemployment claims are that robust. No, everyone's on commercial. It's fine. Oh, because it's almost 6. Oh, I get it. Oh, okay. See, be a broadcaster, you just have ads all the time. Let's see here. Okay, what else? Max, I posted it in the video. Alright, so let's see here. Hey, Kev, calls or puts today. You know, I think it depends how things open. The open will be really telling. I think at the open, you're going to have, you know, institutions that look at this and say, okay, you know, are we buying that unemployment claims matter, or are we going to sell it? I personally think it's, I mean, it's hard to say, but you probably have, I mean, you don't really have negative caddies today. And I was expecting a bounce in the morning, at least what I said yesterday. And yeah, what, I'm trying to think, what about, I don't know. It's tough to say. I guess the way I would trade this is I would look at these two lines here on BTC and the Qs. And if we gave up these lines, I'd probably go short. And if we didn't, I might just watch. Sometimes I'll grab a call. I used to be a lot more interested in grabbing calls, mostly because the market sort of had the wind at its back for calls, but right now it seems like the market has the wind at its back for puts. Let me see here what the put-call ratio is right now. Put-call. Oh, it's only at 0.69 right now. That's surprising. Yeah, it's like the put bets have mostly been unwound again. If I go back to... Yeah, if you go back to like last July to October, it was frequently above 1 and probably averaged about 0.88, somewhere around there, 0.9. So, looks like you're getting some put unwinding here. Huh. Interesting. Anyway, 30 minutes to go until the market open. So, we'll see what happens here. Okay, what else here? Vol compression. Do you think QQQ is going to bounce off the daily 200 DMA? 429. Oh, okay. Well, it depends. It kind of depends if we hold today's. I mean, we're close to it, right? We're five points away. Interesting. Let's see if we hold that first. So, Richie says hold cash. Sheldon says gonna be a calls day. Upwork earnings. Oh, sure. Upwork. Q2 EPS beat, Q2 revenue beat, fiscal year miss. That's not a surprise that you're going to get a slowdown in Q3, Q4. Q3 miss. Shares fall 9.2%. Yeah, this is what I'm talking about. Like Q2 good, Q3 bad. It just sort of reiterates that you hit a big slowing for Q3, Q4. It's only down 3.7 right now, although very, very thin trading. And look at this. You have volume of like 5 to 100 shares in pre-market. So very, very, very low volume. Yeah, okay. But that is interesting. All right, let's listen in over here for a moment.
People are done. They're not going. The consumer's choosy. The consumer's been empowered. And the consumer goes where they want to go. The consumer likes convenience, hence DoorDash and Uber. The consumer doesn't like anybody who raised price and raised price and raised price. The consumer likes Costco and Walmart, doesn't like general retail. The consumer's being revealed, David, as someone who's canny and done with the companies that took advantage of COVID, raised price, complained supply chain, complained whatever. David, we need price rollback if you want to get the consumer in.
So, all right, how did that...
Carvana said that, by the way.
It's an interesting take, but what does that have to do with yesterday's moves and what it means for today?
That's the take.
That's the take?
Yeah, that's the take.
Okay, so I'll extrapolate.
It's an interesting take. Interesting is such a negative term.
And therefore, odds of recession are strengthening, and
well, no,
so...
You asked me on the 30...
Why did the yields go up, then?
Well, the yields are just... These auctions aren't that good, or they jobless claims. Forget the yields. Okay. It's all within a little bit. It's just niggly. What does matter is you have companies that are totally out of sync. And they're not in trouble, but they're doing really poorly. And you referenced Warner Brothers Discovery. It's not doing well, okay? We have companies like a HubSpot that Alphabet was going to buy, not doing well. We have today, David, I have something that I think you would love, which is a downgrade of Intel.
Really? It's just piling on. You can't help yourself, can you?
No, that was meant to be a joke.
Oh, it was.
It was meant to be that there's an intellectual vacation.
Usually I get your
myself.
jokes, except when they're not. When they're not funny.
But, no,
And then I don't
not funny. Well,
know.
no, can I just start over because you're interrupting my thoughts?
Wait a second. It's role reversal.
But yes. Okay. This is what defines this market.
Tell me.
J.P. Morgan, gradualism under pressure, central bank gradualism, activity data, and it's the percentage of people and them thinking that there's going to be a recession. They're saying 35%. Leslie Picker's interview, our own Leslie Picker, is what they tell you to sell. I mean, whose is it? It's somebody.
She's ours.
On loan. She's been borrowed by the Japanese bond. You know, she's ours. Did an interview yesterday with Jamie Dimon, which I thought was one of the most calming, terrific interviews. But then we come up with this JP Morgan piece that says 35%. And this is the game, David. The game is to get...
They're referencing the fact that Jamie Dimon suggested we're not in a recession right now, but JP Morgan did increase their odds of recession to 35% this year. Keep in mind, a lot on Wall Street think that if we're going to have a recession, it would actually be at the beginning of 2025. And the biggest thing that I got from Jamie Dimon was actually the concern that he argues we're not going to get close to 2% inflation, which is bad, not because I believe that, because I'm not a believer that inflation is actually that big of a deal right now. I think it's mostly solved. But when you have people like Jamie Dimon saying that, the Fed hears this, they consider these elements, they look at, you know, Disney raising prices, it amplifies the impact of the ISM pricing that we saw on Monday. It amplifies basically any kind of hot report. And so it's something that I think could keep the Fed looking at going, we're just going to do 25 BPs. And then what they're really doing is they're tightening more rather than loosening. So not great. But it was odd timing. So I agree with Jim Cramer here that it's sort of like, you just said we're not in a recession, and then your bank comes out and raises the recession odds. Just the timing of it was weird. Same day, you know. It could have like waited a day. But anyway, I'm gonna look at. I want to see the Upwork earnings call, but it is a bit of a leading indicator, I think, again on jobs. So again, Q2 beat barely, 193.1 divided by 192.7. Yeah, beat by 20 basis points on revenue, and then EPS beats by 3 cents at 26 cents. Then you have Q3 rev. The midpoint is 181.5, and the expectation for midpoint was 193.4. So you had about a 6% miss on guide. And then fiscal year guide, 740 divided by 776. 740. It's a miss of about 4.6%. Okay. Fiscal year guide, 4.6% miss. Okay. And then immediately Canaccord and Piper Sandler cut price targets to 15 and 13. So I actually think that's a bit of a better leading indicator than claims. All right, let's go back to here for a moment.
We just see unbelievable demand, and we're not even trying that hard to promote this drug. We're not advertising. We told our sales reps to basically just service customers, don't promote. And what you're seeing is just consumer organic demand here as we've shipped more product, as we bring more supply online in the United States.
And having gone to dinner with a few people on the drug, they don't eat.
No, but
they sit there and leave half the meal.
Focused on
very annoying.
You're focused on weight.
Especially when I'm paying the check. Eat.
You paid the check? Where did you go? You go to that Mexican place you always put your building?
Boring. Let's try over here.
are much more attractive at this stage. And within that, you know, we're seeing some consolidation in the tech sector. We're seeing a broadening, which we think is healthy. And equities remain attractive, and we would be adding at this stage.
Yeah, because, if I think about what's driving the index, it's really the giant mega cap tech stocks, right? And that's not really about consumer spending. That's about B2B spending and the AI play. So it doesn't really matter if the labor market's a little bit weak. I guess it does in that the Fed will be driven to cut more. But as long as the AI spending continues, that's going to drive those mega cap tech stocks higher, right? And as long as the positioning point that Sonali makes has been dealt with, is there any other shoe to drop in terms of market mechanics?
Well, look, I think the thing that took a lot of market participants by surprise over the last few days was how a butterfly flapping its wings in Tokyo in the form of the BOJ raising rates could have such a ripple effect on markets. But it's not the first time it's happened, right? You go back to LTCM, the yen carry trade unwind had a massive impact on markets. But I think you're seeing more of an impact. It is August, so it's a little quieter. But also the fact that the fundamentals of how FX trades have changed, algo traders make a huge difference to how quickly things will move.
And this time around, you didn't need a bailout of a massive fund. So I guess that is some good news as well.
Sure, especially if it really has been unwound. I mean, 75% is close to done. All right, we're going to keep you here, Sinead, because we want to continue to talk to you here. Sinead Colton Grant of BNY Mellon Wealth Management is sticking with us. I want to get another check on futures as we head into the markets. We've had such incredible volatility lately that, we could be up 1 or 2% at the open and then down 1% at the close. Right now, we're up almost 1% on the S&P futures, up 1.2% on the NASDAQ futures, and the small caps are doing the same thing. Let's get a look at the individual stuff.
Okay, so somebody is asking, $5, thank you, asking about Trade Desk. Well, so this is a tough one because typically when pricing power wanes, people advertise more. So I'm optimistic about people advertising more, especially in Q2. So like if I had to set it up, I'd be thinking, okay, Q2 beat, right? That's what I'd be thinking for Trade Desk. The question is the guide. Like at what point do companies just start cutting their advertising budget, which is, self-fulfilling, obviously, but, maybe highlighting or prioritizing the most successful campaigns. Like, let's say you have campaigns on Google, YouTube, Amazon, Facebook, and Trade Desk, and your Facebook ones are doing the best. Is there a potential where in harder times, the company says, you know what, we're going to reduce all of them but Facebook? Whatever one is doing the best. I don't know. So I do know that Trade Desk is expecting 11% volatility. So you're definitely pricing in a pretty big move. Right now you're sitting at 86.46, and an 11% move on this would take them back to $96. If we get an 11% down, it would take you pretty close to this line right here, 76.55. So I'd probably say 98 to 76.55 is your range. I'm not going to trade it. I usually am not great at trading earnings, so I like to trade other things instead. Just because sometimes earnings go exactly the way you think and the market goes another way. It's kind of crazy. But that'd be my thesis over here. Couldn't ultra ETFs cost 66% of money sidelined? I'm not exactly sure what you mean, Forney Kid. Are you talking about like cash on the sides? A lot of cash on the sides is not investable. Let's see here. This pump feels weird. Squirrels. Market started green yesterday, ended red. Gonna happen again, says Owen. Whole economy is supported by tech stocks that don't make anything. I think you're referring to the AI portion that doesn't make anything. Yeah. Everyone buy an out-of-the-money SPY put at open, says Joel. Is Trade Desk still a post-election play? I mean, everything's a post-election play, right? Personally, Eddie, I don't know about your situation, but I think selling put options in this environment is scary because if you do get a correction, like a larger correction than we've already had, you've lost your ability to deploy cash at lower values, right? Kevin, give us your updated bear to bull ratio. It's still 2.5, so nothing's changed. So it was sat at about 2.5 last Friday, and despite all the Japanese craziness and the volatility in markets this week, it hasn't changed. So still sitting at 2.5. Certainly, unemployment claims are going to do nothing to that. Unemployment claims are highly worthless. It's shocking to me, like some of the commentary of folks. I think what happens is people kind of just look at like, oh well, the sticks are green, so it must be good news. But I posted the chart on X, Twitter. I said, unemployment claims are a horrible leading indicator of recession. And I literally show, and we explain this, the peak of unemployment claims is literally at the end of a recession, not at the beginning. And this person goes, why is that a horrible leading indicator? Serious question, please. I'm like, okay, either they don't know what a leading indicator is. A leading indicator is something that triggers before a recession, okay? Or they don't know what a lagging indicator is, which is something that triggers at the end of a recession. Oh, like unemployment claims. Or they're just being facetious. I don't know. I don't understand how this chart is that hard to read. So that's my serious question. They're giant red arrows. I mean, maybe they don't realize that recession is the gray bar. I don't know. I have no idea. I have no idea. Next week, PPI and CPI. Yeah, the interesting thing about CPI, PPI is that lately what's been happening is when we get low CPI, PPI, we actually end up getting stocks selling off because people believe that earnings growth will be lower. That just started, within the last couple of months. Palantir Microsoft, big fan. It's called trolling, maybe, or it's just sad. I mean, they wrote serious question, please. I mean, I don't know. Are most stocks you follow no man's land? No, I think a lot. There are plenty of lines out there. Would you sell SQQs that reopen later or wait? No, I don't have any plans to sell my long. I want to pick up more SQQs because I took some profit on some of them right before the close yesterday. But I have more SQQs, and I was expecting a bit of a bounce this morning, which is why I took some at the close, and because we also had that giant drop into the close. And it was 2 or 3 minutes before the close too, it just started tanking. In fact, let's go look at it. And yeah, I want to add to those sort of positions, but we'll see how things go because right now things are gonna rally here at the start. But let's look at the end of the day yesterday. Yeah, look at this. So, I mean, obviously we bled throughout the entire day. Bled. And then right here, last 7 minutes or so, you really had to sell down. This is on the Qs here. Oh, yeah. Okay, yeah. It was more like minute 5 and 4 is where you had the larger candles. And then you kind of just stayed down. Oh, that's on average, though. Yeah. No, but that's when you had them. But yeah, I get the idea. I mean, if the market is going to rally, you could always close and reopen. Let's see here. It does look like we are. I mean, we've confirmed the 438 line pre-market here multiple times now, so it does seem like today wants to be green, especially with BTC. Yesterday, we were actually rejecting off of this 57,580 line, and we ended up getting red on the day. Only downside I see for today is the Nikkei ended up going from green to selling off. And some people are kind of using that as an indicator to trade, which I think is very interesting. But we shall see. Okie dokie. So let's go to... Let's jump over here. Okay. Oh, it's not loading. Okie dokie. What happened? Where's my stuff? Oh, here we go. Oh, no signal. How weird. What is going on? Oh, there we go. It's taking an extra moment. Okay, very good. So, what are we going to watch today? We're going to watch, well, certainly the Qs. I do want to watch apps. So, I'll put them at the top here. We'll go apps, QQQ, Tesla, BTC, Palantir, Nvidia, Meta. Yeah. Okay. So I'm going to throw those at the top. Hood. Amdis. Amazon. 165 again. Oh, it keeps revisiting 165. Alright. So, let's see here. Somebody says, market rallying today on decent recession-safe news. There's no recession-safe news. Unless Iran starts launching missiles. Yeah. I actually think they might back down. I mean, the latest news is that they might be seriously reconsidering. I don't know what kind of phone call they got from America. Your mom's basement donated 99 cents. Thank you. Let's see here. Yeah, there are two separate channels, Eric. There's this Market Live channel, so you have to be subscribed and hit the bell, and then there's the Meet Kevin channel. Maybe the Nikkei copied the U.S. markets from yesterday. Well, maybe. Yeah, who's copying whom? I see what you're saying. Hood earnings were okay. I tweeted about Hood earnings. I wrote, what did I say? I said, monthly active users jumped 9% year over year on 156% more advertising spending. This needs help. The company's only been profitable for 4 quarters, and net profit rose 16% quarter over quarter. Year over year, 6% above expectations. Monthly active users missed by 10.6%. Yeah, I don't know what happened to the monthly active users. Like, all of a sudden, the people using Hood, at least one day in the month, plummeted like over 1 million users. I thought that was really interesting. So, yeah. All right. Let's try to give Varnes a thought. Oops. Will you give... Oh, we talk about the lines almost every day. What do you want to know? Oh, thank you, Mark. I don't think any other YouTuber is providing as much value as Kevin. Consistent and amazing knowledge, all while being fun. Thank you for that. All right. So let's go in here. What is it? Oh, okay. They're going to play music. Okay, great. Tim McGraw.
Much more domestically focused. And so it's probably a little early to go back into small caps wholesale.
Sinead, we have to leave it there. That is Sinead Coltongrad, CIO of BNY Wealth Management. Now, coming up, we're going to take a look at the companies making the most buzz today. That is Social Climbers, and it's up next. Stick with us. This is Bloomberg.
Okie dokie. 7 minutes to go. What do we have? Nvidia back at 101. Shorted Nvidia yesterday, made some tendies. The Nvidia short was so easy to play yesterday. Look at what we did on Nvidia. Basically, in the morning, I'm like, all right, we've gotten rejected like 4 or 5 times at 108.08. I'm going to short it. And the sucker basically went below my 101 line. Now you're back to it. Crazy. Tesla sitting at that 195-ish, getting rejected a little bit there. A little bit of a sell down on BTCs. Let's see what happens going into the open. Oh, let's see here. Tesla, Qs. Oh, wow. Apps does not want to keep the momentum going at all. Supermicro stays red. Vol still going down. Upwork still down 4.5. Hood's still up 7. Holding on. Barcoding now. I generally don't trust futures or the pre-market at all. So the volumes are just way too low. And you're typically not getting institutional trading. You're getting mostly just retail. That's my take. Alrighty. So, what now? Let's see what else we have. 5 minutes to the bell. Let's see here. Let's see what we got. Wall Street Journal. Boring, boring. Boeing's new CEO is hands-on. Yay. A slowing economy, silver lining, cheaper gas. Woo! Doctors wish more people over 65 took Ozempic. Oh, that's interesting. Office loans are toxic. Wow, there is a lack of news today. Oh, what do we got here? Oh, congratulations. That's amazing. Susie here says, I made $66K in the last week following Tesla and Affirm puts. Not to mention I've bought 2 properties in Henderson, Nevada in the last 2 years with your guidance and courses. Oh, that's amazing. Good for you. Keep buying real estate. Not personalized advice, obviously. Just in general to everyone. Big fan of real estate. Oh, Nick T tweeted? Okay. Jeffrey, thanks for saying that in the $5. I don't know. The goal, I'm not always right. The goal is just to be more right than wrong. So, and constantly refining. Some people call it flip-flopping. Okay, what did Nick T say? I don't see a Nick T tweet. How long ago is just? 22 minutes. Okay. Initial claims dropped to 233. That's all he said. Yeah, that's boring. Okay. All right. Well, very well. So, what's next? Okay, we tried the Wall Street Journal. That was boring. Google and Meta struck secret ads deal to target teenagers on the front of the Financial Times. Oh, no. Campaign on YouTube. Take a look at this. Campaign on YouTube to boost Instagram's appeal to young people skirted search group's rules for marketing to under 18s. Google and Meta made a secret deal to target advertisements for Instagram to teenagers on YouTube, skirting the company's own rules on how minors are treated online. According to documents seen by the Financial Times, Google worked on a marketing project for Meta that was designed to target 13 to 17-year-old YouTube users with adverts that promoted Instagram. What? You mean to say 2 mega cap companies colluded? I mean, I don't know that that's such a big deal. Like, I don't care if 13 to 17-year-olds marketed Instagram. Like, everybody already knows about Instagram. It's just, oh yeah, I'll open the app. I don't know. I guess maybe I'm just not thinking about all of the angles there. But if that's front page news, then to me it sounds like we got a little bit of a boring day. 2 minutes to go until the bell. See what happens. See what happens. What else is going on out there? Somebody says Hood's dumping. Really? Oh, yeah, you're right. Nice. Jeez. Okay. 30-ish seconds to go. Here we go. Anything about DBX? Isn't that Dropbox? So much competition for them. DBX. Oh, yeah. I don't know what it is. There's a lot of competition. To analyze that a bit. But I will look at their valuation after the bell. Good luck, everyone, today. Let's get into it.
Appropriated, for dark's sake. There.
Here's the opening bell. We'll take a look at our real-time exchange back at headquarters. Here at the big board Goldman Sachs Asset Management celebrating its small-cap core equity ETF. Over at the NASDAQ, Abacus Life celebrating its acquisition of FCF Advisors. All right, Jim, it's a wide-open market. We hit Lilly. We hit a couple of the other earnings movers. Yeah. I'm going to give you your choice here of where you would like to start.
All right, I'm sticking with this younger people analysis, and it looks like they don't know what the heck they're doing. First week.
Yeah. Okay, so NVIDIA is selling down at the open, going back to 101, but it is still positive 2.4. Bitcoin's still holding on to its moves. Tesla's holding on to 195. The Qs haven't picked a direction yet. Let's see here. Welcome aboard. Palantir is red candling. The mountain's just opened. Come over. Oh, yeah. There's the app screen candle. How you doing, buddy?
Can I open the front door?
Why?
Because I want to see if the package is here.
Oh, sure. Okay. Tesla now redding. Red. Upwork. Oh, there's 7% on Upwork. Jeez. Datadog's up. And Eli Lilly. What's the market cap these days of Datadog? $39 billion? Wow, I didn't know they were that expensive. That's crazy. Wow, Hood gave up like all of its gain. Wow. Well, people selling the rip. Crazy. Affirm gives up its gains. Amazon's giving up its gains. Micron's moving up. They're also still doing, I think, the more buybacks there. NVIDIA back to 101. Yeah. Pretty much reds right at the open here so far. Watching for a bounce here. Let me go to the non-average sticks. There we go. Bouncing on 194 now on Tesla. Okay, let's listen in here for a moment.
Everything's great.
The old...
Oh, and I'm going to get Dropbox.
Yeah. It's not only is it great, it's better than you think. It's like, you know, he popped open his Celsius. I don't know, do we have a clip of him popping open his Celsius?
I don't know. Let's take a listen to the total denial from the
That wasn't fair. I
Celsius
didn't tell them
CEO.
ahead of time. This is not that kind of show.
Take a listen.
The alleged spontaneity. You've got the best house in what increasingly people are thinking is a bad neighborhood. Does the neighborhood have to get better for your stock to fly?
Well, Jim, we just broke record revenues, $400 million in revenue, $100 million in EBITDA, best quarter in company history. You know, we were a little bit somber talking about the consumer.
Yes.
Saw the category decrease for the first time since 2020 on a weekly read. It was growing strong in the beginning of the year. But the reality of it is, Jim, the sugar-free category continues to be the growth driver in energy category, and Celsius is the category driver of growth.
All right, so he wasn't breaking off his talking points.
No, and that, in the end, is not unlike Dutch Bros. You want the people to be much more like Karen Lynch or CBS. Says, I know we have problems. I've made it so that I'm in charge of a particular area that's a problem. It's on me if it doesn't do well. And I thought she, even though I know that this is a very challenged company, she owns the issues and says she's going to take care of it. These guys don't want to own the issues. They think that everything's going to be fine. And we're just going to go right back to the way we were. Now, David, since we don't know why it went down, maybe it's possible that energy drinks come right back.
Maybe they do.
Maybe they do.
I'm not a user. I don't know people who are, so I have no insight whatsoever.
Well, it's
not unusual for me,
we always have
course,
a pallet of Celsius up in our office.
Yeah.
People drink it.
All right, I'm going to back off this for a moment. So, Dropbox, we're at $2.14 of earnings. Wow, they've gotten very cheap, actually. You're right. Somebody donated $5 to ask me about it, so I'm just looking at it. Wow, 10 times. That's crazy. Now, their growth for the next 4 years is projected not to be that great, so that's probably why. And now, obviously, you know, things could be different from what Wall Street expects, but Wall Street thinks they're only going to grow 5% a year on average here for the next 4 years. So that still puts you at a 2 peg, but that's still, for software, lower than usually what I like to see, which is about a 2.5 on peg. So very interesting to me. Now, another thing that's very interesting to me is I'm watching this very closely, because this is my indicator right here to buy puts, is losing this line. We just lost it there for a moment. Now we're bouncing on it. My guess is we lose the line, but could be wrong. So, you know, I always like the little nibbles and DCAing into puts that you hold for longer periods of time if you want puts, or you could do the same thing with calls. Almost a perfect bounce here on 101 on NVIDIA. That's bullish for NVIDIA. Look at that, bounce on 194 on Tesla. And Q's struggling a little. Apps is not, though. Apps wants to run. And Trade Desk, 175. Lulu, Datadog. Datadog giving up a little bit. There comes Robinhood back a little. And what's up, dude? You just coming to hang out? Yep, I'm cool. Apple, this is gonna, this sort of movement on the megas will sort of move your NASDAQ. And yeah, Apple bleeding. IWM's holding on to its 1% there. Apple's not. And let's see here. Oh, look, Super Micro goes positive. Usually it follows NVIDIA, by the way. And NVIDIA's trying to push right now. And this is a big one for me. Is I'm gonna watch this very closely. We're gonna keep that that level on BTC. Who actually uses Dropbox? I actually use Dropbox. Yeah, we you know, thanks for the $4.99 there on Ulta. We've done a lot of analyses on Ulta in the course member live. As we usually do, we go deep into the earnings calls and financials and stuff. You know, Ulta's had a little bit of a valuation runaway, which has been the problem for Ulta. Now, they've corrected a bit since then, but right now you're trading at, yeah, you're only trading at 12.5. Now, your projected growth is 39 over the next 4 years. So you're only trading for 1.23 times PEG. It's honestly probably a good deal. You know, obviously there are concerns about the trend in retail right now and pricing power waning. So the problem is, not only do you have a downtrend, which is very, you know, becomes very shortable for people, but you also have this sort of anti-retail narrative that's going on right now. That's not that great. So, you know, I do have concerns over that. And then, okay, yeah, there goes BTC. So this was my indicator. This was my sort of tell. Now, we haven't fully broken it yet. It's just on a 1-minute candle here. So, well, I like waiting a little bit. You know, and DCAEN too is a take that I do. I mean, I've got positions on these already. So, but yeah, this isn't surprising me that we're going to go back to this 438. That's literally what we said. You know, I think 5 minutes before the market, somebody's like, "Oh, are you going to, you know, sell your calls on SQQQ and try to rebuy them?" I'm like, no, if anything, I'll try to add, especially if we end up breaking these lines, which we are, which is, you know, a bearish indicator. So I'm going to add a little more to that play right now. There we go. All right, and that's probably good for the day. And now we just wait and see. Let's listen in here.
You want to ensure that you're having access to parts of the market where the quality is high and where the competitive advantages are growing. And right now, what we've seen in terms of the Qs and in broader is that artificial intelligence is what has been driving the market so far. And a lot of that value has accrued primarily to semiconductor companies. Now, when we think about what prospects will look like moving forward, AI is not going anywhere. I think we can all agree on that. But there are parts of the value chain that have not accrued to the same extent.
How
Infrastructure plays, yeah.
How concerned are you to that end about concentration risk at this point still in the market?
So it's something that we're vigilant about always. I think that concentration levels that we've seen within the S&P 500 have reached the highest levels that we've seen in many, many years now. So while concern maybe is not the word that I would say, we're definitely observing it and we're cognizant of it. And in that way, we think that there are opportunities moving forward in areas outside of that concentration. And the biggest thing that I'll mention maybe is that concentration would worry me if the underlying fundamentals of those companies were deteriorating or if they were highly indebted or unprofitable. Now, that is not what we're seeing in these mega cap tech names now. Strong balance sheets, high free cash flow generation, strong margin. So when we think about equity markets moving forward, we're still constructive on that space. It's just
yeah, until there's a recession. Okay, so Datadog is giving up its moves. A lot of giving up, honestly. It feels a lot like profit taking over and over and over again every day. Datadog up, now it's going down. Now ARM's going down, even though it opened up. Snap is peaking out. Embraer gave up some of its pre-market gains. Let's see here. Coin's not really doing anything. UI's up a bit. Uber's actually going up. And they keep trending up. Microsoft is bleeding. It's only up 64 bips. SPY's bleeding. CrowdStrike bleeding. Google's trying to figure out what way to go. Which way to go. Rivian's up 1%. Redfin gave up some of its open rally there. IWM's kind of stable in that 90 bip range. Affirm somewhat stable. Amazon gave up 165 real fast. Hood. Oh, there goes Lumen. Red again. Oh yeah, now it's bleeding out. Q's barely holding on to 1% here. Bitcoin lost the 57,580 line, which was bearish yesterday. Very bearish yesterday. As soon as we lost this yesterday, it was like straight down the rest of the day. Who knows? Maybe it'll rally again, but that was bearish yesterday. Tesla's barcoding between 195 and 194, which really suggests it's becoming a little harder to break out. Palantir wants to hold up 3%. Nvidia gave up 101. That's surprising. And Ulta's up a bit. So we shall see. All right. So let's see. People want comfort food during a recession, says someone here. Okay. I don't know what that's about. Scott says, if investable cash is at all-time lows, there's no way we get above 60K BTC right now. Up 400% on monster puts. Dude, let's go. Hell yeah, that's freaking awesome, man. Let's go. Yeah, when we did our analysis on the course member live stream last week, I'm like, I have completed my analysis. Buy puts, not financial advice. Let's go, dude. 400%. Jeez, nice, man. Wish I held him that long. Good for you. All right, very well. So, what else we have here? We have Tesla rolling over. Q's trying. Is there any other news? Any other news? No. As AI costs surge, investors embrace less is more data strategy. Oh, okay. Yeah, sure. Anyway, what else? Yeah. All right. So anyway, brief listen in over here. Then we're gonna do an earlier course member live today.
Yeah, well, that's good.
All the
Actually,
kids
look,
these
Solomon's
days.
done a good
All
job.
the kids,
Remember
they're
they
into
used to
private
knock
credit.
Solomon? American Express had a good quarter. The stock went down 10%. It's incredible.
Yeah.
People used to knock Solomon. Turns out he's the winner.
You mean you're not talking about Solomon from the Bible? You're talking about David Solomon.
Okay, yeah, they got nothing going on. All right, I've got a big meeting coming up, so I got to get things moving a little quicker today. Usually we're longer on these open lives, but I'm gonna get to the course member live stream pretty much right away, and then I got to get to work. So while we watch Tesla fall, I'm gonna press this button.
Go yourself. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate an actively managed ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Gee, Apple wants to go red. That's crazy. Crazy day. All right, folks. See you in the next one.